Imagine waking up tomorrow and 40% of your net worth is gone. Not because you did something wrong, not because you misjudged the market, but because the world decided to remind you how fragile your plans really are. Most people panic in that moment. Most people sell. Most people swear they'll never invest again. But the Stoics, they prepared for it every single day. And that's why they were unshakable. What I'm about to show you is one of the most powerful mental tools the ancient world produced. A tool that investors today desperately need, but almost nobody uses. It's called Premeditatio Malorum, the meditation on things going wrong, the rehearsal of loss before the loss arrives. And if you understand it the way the Stoics did, you will build something far more valuable than money: emotional immunity. Let's begin. Most people think money stress comes from losing money. It doesn't. It comes from being surprised by losing money. Surprise is what sparks panic. Surprise is what triggers fear. Surprise is what turns rational investors into emotional creatures slamming sell in the middle of a crash. Premeditatio Malorum removes the surprise. It removes the illusion of safety you built in your mind. And by removing the illusion, it removes the fear. Seneca said something that should be tattooed on every investor's desk. He robs present ills of their power, who has perceived their coming beforehand. In other words, if you expect the storm cannot break you. But here's the uncomfortable truth. Most investors live as if storms don't exist. Bull markets make them blind. Rising prices make them confident. And that confidence becomes arrogance, the belief that the future will look like the past. That's why people were over-leveraged in 2008. That's why people YOLO'd into tech stocks in 2021. That's why people bought every dip in crypto, convinced it could only go up. Not because they were stupid, but because they never imagined that things could truly go wrong. The Stoics imagined it every day, and that's why they stayed calm when the world didn't. Let's break this down. Premeditatio Malorum isn't negative thinking. It's not catastrophizing. It's not living in fear. It's the opposite. It's preparing your mind so that no future event can control it. The Stoics would wake up and mentally walk through everything that could go wrong. I may lose my wealth today. I may be betrayed. I may fall ill. I may fail. Not to create anxiety, but to disarm the anxiety. Because once you have rehearsed an outcome, the outcome loses its power to shock you. And in finance, shock is the real killer. Not the crash, not the loss, not the bad investment. The shock. The feeling of, I didn't see this coming. I have to act. I have to do something. Premeditatio Malorum removes the need to act impulsively, because you already lived the worst-case scenario in your mind. You already survived it mentally, and that survival gives you emotional space to respond intelligently instead of reacting emotionally. Let's talk about why investors actually fail. It's not lack of knowledge. It's not lack of intelligence. It's not even the market's randomness. It's the mind. More specifically, 1. Overconfidence. People believe good times will last forever. 2. Recency bias. Recent events feel permanent. 3. Loss aversion. Losing feels twice as painful as gaining feels good. 4. Illusion of control. People believe their decisions drive outcomes more than they actually do. These 4 psychological traps destroy more wealth than recessions ever could. But when you practice Premeditatio Malorum, all 4 traps weaken. You see your blind spots. You feel the fragility of your situation. You accept the limits of your control. You normalize loss in your mind so that real loss doesn't break your spirit. This is emotional engineering. This is mental risk management. This is the discipline the modern investor desperately needs. Now let's go deeper. Here's how to apply Premeditatio Malorum directly to your financial life in a way that transforms you. Not theoretically, practically. Step 1. Imagine losing 40% of your portfolio. Visualize it. Feel the discomfort. Let your stomach drop. Let your mind start racing. Don't resist it. You're surfacing your internal triggers, the exact triggers that would cause you to panic sell in real life. Seneca did this with death, loss, failure. You do it with money. Step 2. Identify which assets hurt the most. The ones that hurt the most reveal two things: your emotional anchors, your hidden overexposure. If losing one position devastates you more than others, that position owns you. No Stoic allows anything external to own their internal peace. Step 3. Decide your rules before the crash. The Stoics wrote their philosophy before chaos arrived. That's what philosophy is: preparation. Investors must do the same. If the market drops 20%, I do nothing. If it drops 30%, I rebalance. If it drops 40%, I invest more. Rules over emotion, systems over fear. Step 4. Set your maximum drawdown tolerance. Every investor has a pain point. Find yours, name it, confront it. If you think your max pain is 20%, test your mind with 30%. If it's 40%, test your mind with 50%. Build your emotional calluses before the market tests them. Step 5. Create a cash buffer. A Stoic does not rely on hope. A Stoic creates margin. A cash buffer is a psychological safety net. It reduces fear. It reduces impulsiveness. It protects your long-term positions. Step 6. Automate everything. Automation is Stoicism for your finances. It removes willpower. It removes temptation. It removes emotion. You cannot panic sell what you don't manually control. You cannot sabotage what runs without your interference. Automate investing. Automate rebalancing. Automate savings. Emotion fades. Systems remain. Let's bring this to life with a real example. In March 2020, the S&P 500 fell more than 30% in weeks. What did most people do? They sold. They panicked. They told themselves they were protecting their capital. They waited for markets to stabilize. Except, the bottom lasted barely a moment, and the rebound was violent and fast. Those who sold, those who reacted, locked in permanent losses. Those who held, those who trusted their rules, those who practiced Premeditatio Malorum long before the crash. They saw the entire recovery, and then the new highs. One investor panicked and lost a decade of compounding. Another investor stayed calm and gained a decade. The difference wasn't intelligence. It wasn't education. It wasn't market timing. It was emotional preparation. One investor lived the crash for the first time in reality. The other had lived it many times in their mind. That is the power of practicing the worst, so the worst cannot harm you. Marcus Aurelius wrote, "When the impossible has been removed, what remains is within your control." That is the heart of this. You cannot control the market. You cannot control crashes. You cannot control fear. But you can remove their ability to dictate your actions. Most investors lose money not because they were wrong, but because they were surprised. Stoics don't get surprised. They rehearse loss. They walk through darkness. They imagine the fall, so the fall cannot break them. And that is what makes them powerful. Not fearless, prepared. Not unshakable by nature, unshakable by discipline. Not immune to pain, just familiar with it. Because pain rehearsed is pain weakened. Fear rehearsed is fear neutralized. Loss rehearsed is loss accepted. Acceptance is peace. Peace is clarity. Clarity is wealth building. Premeditatio Malorum isn't about thinking negatively. It's about never being controlled again. By fear, by markets, by emotions, by shocks you should have seen coming. If you practice this consistently, you'll start to notice something strange. Crashes don't scare you anymore. Volatility doesn't move you. Noise doesn't seduce you. Bad news doesn't shake you, because you already lived it. And now you're ready. Your mind becomes your shield. Your discipline becomes your edge. Your preparation becomes your superpower. This is emotional armor. This is psychological wealth. This is Stoicism applied to the one arena people panic the most. And if you take one thing from this video, let it be this. The investor who prepares for the worst becomes unstoppable when the worst arrives. Prepare your mind, and the market can never break you again.